Everyone, in today's session, we're going to look at how to analyze transactions that take place in our business according to the accounting equation. So before we start with that, remember that in order for you to analyze transactions and to be able to deal with the accounting equation table, and recording those transactions and analyzing them correctly, you need to know this poster off by heart. You need to know the accounting equation and all its elements and which type of accounts are assets, which ones are owner's equity, and which ones are liabilities. You also need to know the rule for assets, debit plus, credit minus, owner's equity, debit minus, credit plus, liabilities the same as owner's equity, debit minus, credit plus. As we previously said to one another, if you can remember the asset rule, then you should also know that the owner's equity and liabilities rules are just the opposite of the asset rule. So that can help you a little bit. But you need to know that these account names are all asset accounts. These ones are all owner's equity accounts, and these ones are all liabilities. If you don't know that, then analyzing the transactions is really going to be difficult because you do not have that knowledge. So go and learn your accounting equation. Right, when we start with this whole process, there's a couple of steps to follow. It's like a recipe. And if you follow that recipe, you are going to see that you'll get the final results that you're looking for. Now, this video and recording is aimed at, firstly, grade 9s who are doing a bit of revision on grade 8 work before they move on to the newer transactions that we will deal with for trading businesses in grade 9. This is also very welcome for grade 8s who are just starting with the accounting equation. I'm tackling a couple of the very basic transactions that grade 8 should also be able to do. So now you know it is hopefully of value to grade 8s and 9s. Righty. So when we start, we ask ourselves the following questions. And remember, we look at each of these transactions that we're going to see now from the business's perspective. What effect does this transaction have on this business? Right. So when you read a transaction, the first thing you ask yourself is, if I read this transaction, which two accounts in the business's books are affected by this transaction? And then you will go through that whole accounting equation poster in your head, and you will be able to pick out the two accounts that are affected. Now, the rule is as follows. For every amount you see in a transaction, there are two accounts affected. For grade 8 purposes, you will always only have one amount. For grade 9, as we move on with trading businesses, you will come across certain transactions where you will see two amounts in one transaction, and that means that there will be 4 accounts affected by that transaction. But we will leave that for specific trading business discussions a bit later on, not in this specific video. Right, so which two accounts are affected? You need to identify that. Secondly, you then ask, after you've identified the two accounts, you ask yourself, this account, is it an asset, owner's equity, or liability account? And write that down. For the other one, same question, is this one an asset, owner's equity, or liability account? Write that down. Then, and now you know why you need to know that poster. And then you ask yourself, what happened with this account that I've identified? Did the account increase or decrease? Write it down. Next one, for this account, did the account increase or decrease? Write it down. The moment you've done this part of the work, the moment you've run through all these questions, you've got all the answers, and you can literally go and plonk it on your accounting equation table. All right, so let's go on. and analyze a couple of transactions. So firstly, I need to tell you that this is an example of how we can analyze transactions. Your teacher might have a different format. Sometimes I will ask account to be debited and credited, and I won't have a reason under assets, liabilities, and owner's equity. Sometimes I might not ask for the source document. You need to be able to enter the information according to what is being asked. And once again, if you've got those building blocks, I can throw anything at you. Your teacher can throw anything at you, and you'll be able to answer that. So let's have a look at this. I'm going to activate the pen so that I can draw and write with you. Excuse the handwriting, I'm trying my best. Okay, so there we go already. The first transaction there is the following. The owner gave a capital contribution by transferring 50,000 Rand per EFT to the current bank account of the business. Okay, so I'm going to do this now, and then we're going to run through the questions, those 3 questions that we're asking ourselves, and I'm going to write it down. And you are hopefully working with me on the other side. Okay, so if we read this transaction, we need to identify 2 accounts which are affected by this transaction. Now, can you see, if we look at it, capital, there's the name of one of the accounts that specifically appears on that accounting equation poster. So capital is one account. And do you see that it says the current bank account of the business? So there's the other account. So, and it doesn't matter where or what you write it down, you can quickly write it down there for yourself. So we will write here, the one account that's affected is capital, and the other account that's affected is bank. All right, that was the first question. The next question was, is this account an asset, an owner's equity, or a liability account? Now, if you go to the basic rules of accounting, I can't click on that now, then you will see and remember that capital is an owner's equity account. Correct, owner's equity account. What is bank? Bank is one of our current assets. Bank is an asset account. Right, now, what happened to this account in the business's books? If the owner gives 50,000 Rand to the business, today he starts the business, right? Yesterday, there was no capital in this business. Today, the owner starts this business and gives 50,000 Rand of his money to the business. Do you agree that the capital in the business, the owner's capital contribution in his own business, has increased because he gave the 50,000 Rand to the business? Good. Now, what did the business do with that money? In fact, the owner transferred it straight into the business's bank account. That's the safest thing to do. So yesterday, there was no money in the business's bank account, brand new business. Today, the owner transfers 50,000 Rand into the business's bank account. Do you agree with me that the money in the business's bank account increased? Okay, once you've done that, people, then the rest is very, very easy. So you can ask yourself, first of all, I'm asking here for the source document. Whenever something is paid or received in our business by EFT, electronic funds transfer, it means that we will see this transaction see that the transaction did take place on the business's bank statement. We draw a statement from our bank account. Mostly nowadays it's done via the banking apps, or you go onto your internet banking profile, and there you can literally see that somebody has given the business 50,000 Rand. In this case, it is the owner. Correct. Right. Now, let's have a look at, now we're analyzing according to the 3 elements of the accounting equation. Did any assets or were any assets affected by this transaction? Indeed, because bank is an asset account. What happened to the business's assets, to the business's bank asset? It increased, and now you need to use the symbols, plus or minus. It increased with 50,000 rand, the business's assets. Why did it increase? Now you need to give a reason. The money in the business's bank account increased. Okay, now you're done with that one. Was there any changes to the owner's equity in the business, or were any owner's equity accounts affected by this transaction? Yes, capital is one of the two direct owner's equity accounts. So what happened there? The capital in the business increased. We determined that. So you will write plus 50,000, and your reason is that the capital in the business increased. And then you're done with that. Now you can just check yourself. Did anything happen to liabilities? Nothing. You can make a zero, or you can draw a dash or a line just so that you know nothing happened here. Now, very important, after each and every transaction that you are analyzing on the accounting equation, go check if your equation is still in balance. So is the assets, or are the assets in the business still equal to the owner's equity plus liabilities? Because that it needs to be like that, otherwise something is wrong. So have a look here. Plus, so here's the two sides of the equation. There is plus 50,000 equal to plus 50,000 plus 0. Indeed, then you know your equation is in balance. All righty, I hope this one makes sense. Let's move on to the next one. Let me clear the drawings, and we clear the drawings. There we go. And let's continue to the next one. Another one over there. Now, what are we doing here? Paid 1,000 Rand per EFT to the municipality for a trading license. Now, remember, our business, or the business, paid 1,000 Rand per EFT to the municipality for a trading license. What is the first step? We need to determine which two accounts in our business's books, or the business's books, are affected by this specific transaction. Okay, if you go through that list of yours, you will probably see somewhere there that you see the word trading license. Okay, so that's the one account that's affected. The other one you don't see straight away. You don't see the name of the account straight away. But people, if our business pays something per EFT, it means that there's money going out of the business's bank account to pay for whatever. Okay, so the two accounts that we have identified in this transaction as being affected by this transaction is then bank and trading license. Okay, and this is where you need to think a little bit. How do they license with SE? I think I always spell it with a CE, but don't worry. License, you sometimes need to dig a little bit to get to the names of the accounts. But once again, this refers back to your accounting equation poster. Okay, and talk to yourself. This is important. I know maybe for the ladies is a bit more, easier than for the men, but you need to talk yourselves through this and ask those questions all the time. Right, so that we've identified the two accounts. Now we need to ask ourselves, bank, what type of an account is bank? One of the elements, is it an asset, owner's equity, or liability? You know your poster by now, so you know that bank is an asset. Trading license, asset, owner's equity, or liability. It is an expense to the business. A trading license, our business probably needs to what do you call it now, renew every year in order to be able to trade in a specific town or an area or under certain laws and regulations. So trading license is definitely an expense. You have to pay it in order for your business to operate, but after a year it expires and then you have to pay it again. So that is the definition of an expense. It's something that you use and then it literally runs out and you have to replace it again. Okay, so all expenses we know affect the owner's equity. It's indirectly affecting the owner's equity. Right. So what happens here now? What happened to the money in the business's bank account? If our business pays out R1,000 to the municipality, do you agree that the money in our business's bank account decreases because now there is less money in that business's bank account? Good. What do all expenses do to the owner's equity? We spoke about it previously. Any expense will decrease the money that's finally due to the owner's interest in his own business. So all expenses have the effect of decreasing the profit and ultimately the owner's equity in the business. Righty, once you've done that, the rest is easy as pie. So what is the source document? Again, we pay it by EFT. So I'm just going to abbreviate here, and your source document is the bank statement. Right, then you go to your elements and you ask yourself, did anything happen to assets in this transaction? Were any assets affected? Yes, bank is an asset, and the bank asset has been affected. Money was drawn out of the bank account to pay for the trading license. So my assets, the business's assets, decreased with R1,000. What is the reason the bank asset decreased? That's a minus. Okay, decreased. Good. Next one. Did anything happen to owner's equity? Was owner's equity affected? Indeed, we were dealing with an expense, and we know all expenses decrease the owner's equity. What is the reason? I'm just abbreviating here, trading license. Now, trading license is an expense to the business. I want to stand still here for a second or two. If this makes complete sense, you can say that trading license expense increased. Now, if I put a plus here, do you agree? Now remember, this is now all part of owner's equity. Do you agree that here's a plus, but over here there's a minus? And often this confuses students. So if this is not entirely clear to you, rather just write trading license is an expense. But remember, the more expenses we have in our business, the less profit there is for the owners to take home. So the less the owner's equity. So if an expense increases, then it means it will have an effect of decreasing the owner's equity. So it can be that your amount will have a minus, but your reason might have a plus, because it's when an expense in the business becomes more. We have to pay this every year. So the bigger the expense, the less the profit or the owner's equity at the end. Okay, so you can either write minus 1,000 trading license equals an expense, or you can write, if it makes complete sense, minus 1,000 and the reason trading license expense increased. You decide what works best for you. Right, and that is then dealing with the trading license element, which falls under the owner's equity. Did anything happen to liabilities? Nothing. Make a 0 or a dash. And again, you can see grade 9s. Assets are my assets. The business's assets still equal to owner's equity. Minus 1,000 equals minus 1,000 plus 0. Indeed, in balance, we are on the right track. Let's move on to the next one. Just do that. Another transaction. And often I say that if students understand this one, then they understand the accounting equation. Let's go and have a look. This transaction says, bought a laptop for the business for 8,500 Rand from Crazy Computers and paid with the business's bank card. So there we acquired or bought a laptop for the business. Let's go. Right, which two accounts, business accounts or accounts in the business's books, are affected by this transaction? Okay, so once again, this might not be completely clear, but if we pay something with the business's bank card, it means that money goes out of the business's bank account. Obviously, we bought it for 8,500 Rand. That money needed to come from somewhere, and indeed, it came from the business's bank account. So the one account is bank. What did we do with that money? We bought a laptop. Now, if you think back to your accounting equation poster, you won't see the word laptop there, but laptop falls under equipment in our business's books, and that is one of our fixed assets. So laptop will be part of the equipment in our business. Okay, so there's the two accounts that we've identified. Let's ask ourselves the next question. Is this account an asset, owner's equity, or liability? And by now you'll know that bank is an asset. Help me with equipment. What is equipment? Indeed, equipment is also an asset. This is a fixed asset, mind you, and this is a current asset. So both these accounts are asset accounts. Correct. Help me. What happened with the bank's or the bank asset in our business, the money in the business's bank account when we bought a laptop for 8,500 Rand and paid crazy computers? Yes, there's now less money in our business's bank account because we swiped the bank card and poof, there goes 8,500 Rand to crazy computers. So definitely the money in the business's bank account decreased. Help me with this one. Yesterday, we didn't have a laptop in this business. It's a new business, right? Today, the owner or whoever was sent went and bought a laptop for the business. What happened to the number of laptops within the business? Yesterday, there were 0 laptops. Today, there is 1 laptop. So do you agree that the equipment in this business, of which laptops form part of it, that the equipment in the business increased, even the number of pieces of equipment, also the value of the equipment in the business increased with 8,500 Rand. 0 laptops yesterday, today a laptop. So the equipment in our business, in the business, increased. Hope this makes sense so far. Right, let's have a look. Source document. Once again, when we swipe the business's bank card, or we tap it, or we pay by EFT, that means that all the time money is going out of the business's bank account, and we will see that transaction taking place, or that a transaction has happened by looking on the business's bank statement, by drawing a bank statement. So definitely source document is bank statement. All right, let's have a look. We're under the asset element. Did anything happen to assets, the business's assets in this transaction? Yes, there's a bank asset. Righty. What happened to the bank asset? The bank asset decreased with 8,500 Rand. Why? Because we took money from the business's bank account to go and buy that laptop, the equipment. Now, good. Now, did anything happen to owner's equity? Because usually we must write under assets and owner's equity. But do you see grade 9s and grade 8s that this is not owner's equity? Equipment is an asset. So can I write under owner's equity? No, I can't. Owner's equity was not affected by this transaction at all. This is another asset account. So I have to go back to assets. What happened to this asset account in the business? The equipment asset in our business increased with 8,500 Rand. Reason, equipment, I'm just going to abbreviate, equipment increased. So were any owner's equity accounts affected by this transaction? Not at all. You can make a 0 or make a dash. Were any liabilities affected by this transaction? Also no. So you can make a 0. So can you see now after this transaction that if we say, here's our two sides to the equation, left and right, can you see that minus 8,500 plus 8,500 actually gives me 0. So the net effect of this transaction is 0. There was movement between two assets. One went up, one went down. But at the end, the net effect of this transaction on the three elements in this business is 0, because minus 8,500 plus 8,500 brings me back to 0. So indeed, 0 equals 0 plus 0. So our equation for this business, the accounting equation for this business, is still in balance. So I need you to see that when there's a transaction that takes place within a business, it doesn't always mean that there's something under assets and then something under owner's equity, especially because we don't deal with liabilities. Most of you know that there's nothing there. But you have to analyze each and every transaction. And that's why you need to know whether something is an asset, an owner's equity, or a liability account. Because in this case, there were two asset accounts that were affected by this transaction. I hope this made sense. Let's move on. I think there's one more to be done. If I can get this page to scroll down. Now, for grade 8, you will be dealing for the remainder of the year, or the whole grade 8 year, with current income, where our business provides or renders a service to our clients. Grade 9s, you'll be moving on to trading businesses, but as a revision, let's do the services rendered one so that you all can see that, and then we will have a separate discussion for grade 9 specific transactions. So let's go. Again, read carefully. The cash register roll shows 2,800 Rand received for services rendered for the day. Okay, so once again, this one is not as clear as to which two accounts are affected by this transaction. Now, but first of all, if it says the cash register roll shows 2,800 Rand received for the day. People, if our business receives money, and this is what happened here, we provided a service to our clients and they paid us, we received the cash. All cash must be deposited in our business's bank account. Now, you can't leave it in a little, all this money in a little container, or store it under the bed or wherever. Money that we receive in our business must go to the bank and be deposited into the business's bank account. So because our business received money, one account is bank. That money goes to the business's bank account. Now, why did we receive the money? Why did the business receive that 2,800 Rand? Because our business provided a service or rendered a service to our clients. Now, if you go to your accounting equation poster, the name of the account that's linked to services rendered is called current income. So that's income that our business receives on a continuous basis because we have a service business, because we provide a service to our clients. Okay. And then you do this, the rest of the recipe. Bank is what type of an account? Which one of the elements? It is an asset. Right. What is current income? Listen to the word income. What do all incomes do? They affect the owner's equity by increasing the profit in the business and ultimately the owner's interest in his own business that he can take home when he wants to. Right. So what happened to the business's bank asset? If our business receives 2,800 Rand, do you agree with me that the money in our business's bank account has increased and therefore the bank asset increased? As we've just said, all income accounts increase the owner's equity, increase what is due to the owner. All right, because we worked hard, we provided a lot of services, and the positive spin-off is that there is more money for the owner to take home. And there you've done the hard work already. So our source document is the cash register roll. That shows to us that these transactions have taken place, and therefore your source document will be your cash register roll. Did anything happen to assets in our business? Were any assets affected by this transaction? Yes, we have bank here, which is an asset. The money in our business's bank account increased with 2,800 Rand, and therefore the asset element in our business increased. Good. Did anything happen to owner's equity? Indeed, current income is an owner's equity, or it affects the owner's equity positively. It makes the owner's equity more. So plus 2,800, and you can just write the reason, current income. Right. Did anything happen to liabilities? Not at all at this stage. Make a 0 or a dash. Double check yourself on the left-hand side of the equation versus what's on the right-hand side. Is plus 2,800 equal to plus 2,800? Indeed. And that means that this equation is still in balance after all these transactions that we've done so far. Righty, I hope this one made sense and that you are now feeling more and more comfortable with these transactions. Okay, I'm ending off with one of my favorite ones that I tell my students, if I set a paper or an activity, they will most probably find one like that because it's part of everyday life. It happens, especially with small business owners being involved in their own businesses. These are things that do happen. So let's quickly have a look at the very last one, and then I hope that you will have a clear understanding of the accounting equation and how to analyze transactions according to the AOL. Right, the owner ordered a bunch of flowers for his wife from Fancy Floral and paid 340 Rand, obviously not on Valentine's Day because that's too cheap, per EFT from the business's bank account. Okay. A whole lot of things are being said here. We need to determine and identify the two accounts that are affected by this transaction. If I read quickly, can you see here with me that bank is one of the accounts that are affected, and we can write bank down. Now, what happens, or what do we call it, when the owner clearly is using business money from the business's bank account? And remember, grade 8s and 9s, you can tell me, but ma'am, the owner originally gave the money to the business through his capital contribution. So it is actually his money. Yes, the business owes the money to him, but we need to keep record of this. He gave it to the business, so now it's the business's money. Yes, they owe it to the owner, but we need to ensure that proper record keeping is taking place, and we need to determine what is finally due to the owner. So I do agree, he did give the money to the business, but once you have given something to somebody or somebody else, then it's not yours anymore. Think of toys there. So that's the business's money now, which they owe to the owner, but we need to keep record of that. Okay. So, yes, by now you've determined that the other account that is affected by this transaction is drawings, one of the two owner's accounts in the books of our business. Okay, so if we take, and you can start anywhere, but if you take that 340 Rand, if the owner did take it, from the business's bank account, first of all, let's determine which elements are these. I forgot that part. Bank is what type of account? Bank is an asset. We know it by now. Drawings is what type of an account? Drawings is one of the two owner's accounts, so definitely an owner's equity account. What happens if money is taken from the business's bank account? Obviously, the owner took money to buy his wife some flowers, so the money in the business's bank account decreased. Right, so drawings. What does drawings, when the owner takes back some of the money that he originally gave to the business? Yes, all drawings will decrease the owner's equity. Our business does not owe that much money anymore to the owner because he's now just taken back some of that money, used it to buy flowers for his wife. Correct. Righty. Now, if it's per EFT, then we know by now the source document is the business's bank statement. Right. Did anything happen to assets? Yes, there's the bank asset. What happened there? The assets of the business decreased by how much? 340. Why? Because money was taken out of the business's bank account. So the bank asset decreased. Okay, so we've dealt with this one. Did anything happen to owner's equity? Indeed, there was drawings, and all drawings decrease the owner's equity. There's less for the owner to take out. He's already taken some of the money back. All right, what is the reason? Now, please remember, just write drawings, or again, you can say that the drawings in the business by the owner has increased. You don't have to write the plus. It's for students who clearly understand this. The more drawings there is, the less owner's equity there is for the money for the owners to take home. All right. So the higher the drawings in the business, the more times the owner withdraws money from the business, the less there is that he can finally take home. Okay. So that is how we would analyze this transaction. Please note, where's my pen? Please note, obviously no liabilities, that drawings is not an expense. It is one of the two owners' accounts in the business, capital and drawings. Let's lastly double check. Have we managed to keep this accounting equation in balance right through all our transactions? Yes, because over here we have minus 340 equals minus 340 plus 0. So everyone, this brings us to the end of this discussion and video recording. I sincerely hope that this helped you in order to analyze transactions on the accounting equation. Please remember to keep on asking yourself those questions. We've done, what, 5 different transactions. I can literally throw any transaction at you as long as you follow the recipe and you follow those steps. Which 2 accounts are affected by this transaction? Pick them out, pull them out from that transaction that you see. Secondly, these 2 accounts, this one, is it an asset, owner's equity, or liability? And you will know it by knowing this poster of yours. Right. Lastly, these 2 accounts, which I've identified as either assets, owner's equity, or liability accounts, did they increase or decrease? The moment you've done all of that, all that footwork, you can just come and record and plonk it here on your accounting equation table. This is one format that we use. In another video recording, I'll probably use a different one so that you can also get used to the different formats. I really hope you found some value in this video, and I hope to see you back soon. Take care. Bye-bye.